right, everybody, welcome to our webinar series. This would be number 3 of our 4-part series. I'm going to dive right into this for the sake of time because there's lots to cover and I want to get into this right away. So if you don't know us, we are Holt Accelerator. We are one of Canada's most active early stage investors, 27 investments to date, over 50 deals with our existing network. That's because we have over 500 advisors strong right now, representing 50 financial institutions and over 110 independent angels or institutional firms. In fact, one corporate partner who's actually on the call today has had over close to 4 customer deals. Very proud of this to this point. And our portfolio is seen to have raised $10 for every dollar that we've invested. Again, so we're looking for the top fintech companies from around the world, especially those pre-Series A, talking pre-seed, bridge, or seed, and those looking into who are in North America or looking to enter into the North American market. All right, let's get into it because there's a lot of stuff to cover. Today, we're here to talk about the wonderful world of lending through iBorrow. So let's talk about the high-level metrics that we've seen here. That lending has definitely surged in the last bit. We've seen 800 billion increase, so close to 15 trillion. This is in the U.S. consumer debt, a 6% increase, a growth over the last decade. This is the largest increase recorded over the last decade. Areas where we're seeing increases is student loan debts, mortgage debts, and personal debts. But on the flip side, conversely, which is good news depending on how you look at it, credit card debts have actually decreased, as well as home equity lines of credit. The other side to look at is those with the lowest credit scores have seen a drop in the amount that they owe at this point, attributable to potentially a couple of reasons. A is that, well, they can't get access to credit at this point too, but B, also that they're looking at repaying down a lot of those debts as well. All right, let's look, and I want to cover 8 key trends before we get to the panel here. Lender realities. COVID has created a world of have and have nots. So some lenders performing better than others. Certain lenders with strong relationships through their sponsor or intermediary communities are in a very strong position right now. There's also bond rates at an all-time low. So investors actually looking for attractive investments to come in right now. But many still believe that there's a long tail to this whole recovery period. So everyone's very closely tracking, economic policy and government support. But let's talk about the new entrants that we've seen before, right? Alternative lending as an example has actually kind of had a 3-year slide in invested capital. So it's actually been more stagnant realistically. It's around 8.9 billion in VC funding in 2020. Now, alternative lenders are really starting to commoditize and compete on pricing, customer demographic, and ancillary products. So we've seen things from SMB lending models, revenue-based financing. But of course, if you saw on the left a little bit with COVID, a really surge in buy now, pay later, a 7x increase in revenues since 2016 for the market as a whole, and challenger banks, right? So for over the last 5 years, we've seen 17 billion raised and 39 million users. So like a bunch of new entrants coming into the space here. Open innovation. I love this topic about how to better feed your product roadmap. So whether you're using APIs or that magical word of open banking, seeing different ways to go about doing this. So using different solutions like being cloud-based solutions or microservices in this case, to give some examples, like maybe supporting video KYC and digital ID verification, but also going up and down the value chain. So focus on accounting, right? Working with different providers to get access to those accounting systems, to view different lending opportunities, payroll systems. I'm talking salary on demand, salary advances. But you're seeing now different ways of plugging into those systems. You have core integration providers to plug in those different, let's call them fintechs, into those lenders. But on the other side, you also have people building out the digital cores for those lenders as well. We're talking about digital processes. Accenture had come up with saying that over 50% of banking tasks are still manually performed. In North America, this is $70 billion that's available to be solved for by 2025. Digitizing that customer profile. Loan approval is still one of the biggest bottlenecks there is. So how do you reduce that inconsistency of that information sharing between teams and avoiding errors that are avoidable? Digital platforms can just help unify and dashboards of all the parties on the same page, reducing the delays in that processing, but also be able to sync up with third-party providers and firms. Digital onboarding, very interesting time. I think we've heard a lot of this through the last bit of COVID. Massive shift, right? As the bar abruptly rose for customer satisfaction, the demand for customer satisfaction for digital financial services, almost overnight, loan officers went from in-branch to at-home environments. So we really had to streamline that cloud interface processes, document upload portals, remote authentication, all this fun stuff. According to mortgage reports, as an example, 43% of 2020 home buyers completed the entire mortgage application online. Someone like myself actually did. It still says there's a lot of bottlenecks and processes to be fixed, a lot of friction still there. Also, this leads to the idea of embedded finance and how to participate early in the buying cycles. And we're seeing surge in e-commerce and POS systems. But it's not just the embedding to these other areas, but better communicating omni-channel from websites, application, text messages, right? Over in the US, 3/4 of users prefer mobile banking. And they're not just asking for a digital interface, but really intelligent and interactive chatbot systems. Big tech is on the rise, and it continues to be over many of the different years. I mean, Asia is one of the biggest areas for this through big tech credit, with Alibaba leading the way here, likely due to the difference in financial infrastructure. So 2/3 of Chinese citizens lack traditional credit histories, so leveraging alternative data sets to be able to serve them. If we look on the North American front, Amazon lending program, so being able to fund loans was subject to approval by Marcus, by Goldman Sachs. So it's an important move because we've seen about $1 billion in merchant cash advances. This was a couple of years ago. Online payment platforms like PayPal offering working capital to its members. You being able to make those repayments a little bit more easily because it's based on a percentage on each day's payments received through the platform. So better servicing non-traditional workers like freelancers in the gig economy. Stripe Treasury that was just announced, enabling platforms like local Canadian-based Shopify to offer merchants access to financial products. Two more quick things. ESG is still a big topic no matter where we look. So we believe financial health is going to take center stage in 2021 for a few reasons. Some of that being obviously consumers' ability to pay and the effects of COVID. Many still living obviously paycheck to paycheck, and that only being further exacerbated. But we're starting to see that potentially rumors on the new administration in the US to require banks to monitor and improve their customers' level of financial health, which of course any of the things that happen there would likely trickle into other jurisdictions. And talk around ESG, around green bonds. However, there's still much work to do around there, and especially some of the biggest areas to focus on is how to better report on the ESG side of things. And lastly, around technologies, don't want to spend too much time because we're also going to hear from our panelists. But one of the elephants in the room is around artificial intelligence and machine learning. Massive amounts of data applications can lead to better approval, faster approval processes, lower loss rates, all this fun stuff. Blockchain stuff still in its pilot infancy. So we'll kind of leave this for now because I do want to spend more time on actually getting to our awesome panelists. So I'm going to quickly introduce them. Each of them, Christian Laroche, over 20 years of experience, primarily in product innovation, first in telecommunications and now in financial services as VP Product Innovation at Fairstone. Got Bruno Diaz, over 15 years primarily in banking services in Brazil, especially in innovation, consulting, and academia. Currently managing partner of Spirit Relem, professor at FDC and South America, director of F Data. Sue Britton, over 25 years of experience as a consultant, sales product development, including big companies like Xerox, SimCorp, Broadridge, Finestro, to name a few. Now founder and CEO of Fintech Growth Syndicate here in Canada, alongside serving a lot of the community as different as a startup in different fintech advisory roles. And last but not least, Amar Ahluwalia, over a decade of experience, namely in financial services, starting in capital markets, shifting into fixed income and executive roles, and recently opted to go back into the startup world. All right, that's a quick rundown of them. I'm going to dive right into it and ask the first question, Christian, because we had a pre-panel. I want to get your perspective here. You guys are a very instrumental lender, and so your perspective on how it's viewed on the economic kind of stability on the Canadian lending market. If you want to lean more on the consumer lending, that's fine. So just want to hear your perspective on how you guys are seeing it right now.
Sure, and thanks for the intro, John, and thanks for all the material you put up beforehand. You probably stole the thunder of a lot of people that are going to go after you, but then it was all good stuff. Kidding aside, though, I'm a product guy, so I'm not an economist. So take what I say with not as a crystal ball type of prediction or anything like that. But I mean, we do see an economy that's much stronger, I believe, than what we expected. We're at the beginning of this pandemic event, you had a lot of doom and gloom, and for real causes. I mean, things were tanking left, right, and center. You've got this inexorable growth machine going on right now, right? You've got, just here in Canada in the news last week, if memory serves, and I'm going by memory here, but an annualized rate of 5.8% of GDP growth for 2021, 4% for 2022. I mean, the economic engine is going strong and is going forward. Now, that's propped up by government help, CUES and CERB and all the different programs that the government has put together in order to maintain the economy afloat to a certain extent. But I think there's quite a pent up demand, and that actually translates into more need potentially for credit and credit products that are fairly priced and affordable to each and everyone. So.
Awesome. Thanks for that. Well, let's focus on the product side as well. We'll get you play in the space that you like to play in. So you mentioned when we had a previous call, there are forces leading to innovation, especially around like digital onboarding, a lot of talk around that, accounting for either KYC, AML, fraud related stuff. Can you just expand on those thoughts there?
Yeah, and that's a good one. Thank you for that. So people that weren't necessarily comfortable with doing things online didn't have much of a choice after March 2020, right? It was either that or you stayed in your basement and you twiddled your thumbs all day long and you never got out. So it brought people that were not necessarily digitally natives, like the Gen Z and to a certain extent the millennial as well, but it brought them to look and assess how to procure goods and services online and to get more comfortable with that. And let's not forget that in a society like Canada, which is a fairly old society in terms of age. If you look at the age pyramid, we're not a pyramid. We're more kind of like a weird hourglass figure kind of thing. A lot of the consumers are people that were probably late Gen Xers and early baby boomers, and there is some friction to procuring services and goods online. Now, what that did, like I said, is that it brought people to consider that and to use that. But what it also did, however, is that it brought a whole slew of things that financial institution and lenders in particular have to kind of grasp with. And Winston Churchill said something along the lines of, never let a good crisis go to waste. So it forced all of these financial institutions to relook at their processes. And you mentioned it, Jan, earlier on. The lending process has a lot of friction point in it. Some is voluntary because we don't necessarily just want to give money to whoever raised their hands, but some can be worked on, and that's what we're doing, and that's what a lot of financial institutions are doing. And one of those is ID, and you mentioned that as well in your opening statement there. There is a need, I believe, and this is my personal opinion here, not necessarily representing who I work for, but I think there's a need for a unified national type of digital ID. And I'd love to see that. I mean, there's a lot of companies out there that will create an ID for a specific financial institution, and it can only be used within the parameters of that financial institution. But I think what's really powerful is if they can be a digital ID that is shared amongst different actors within the system. So that's kind of from a product standpoint. That's kind of like what I'd like to see and what happened and where we're kind of pushing towards.
Awesome. Thanks for that. I want to shift over to Sue actually. First, we've spoken previously. On our last call about the retail and consumer experiences, you talked about forces like BNPL, regulatory challenges hinder new entrants from entering this market, underserved markets in Canada. But just building off Christian's approach, and he mentioned magic words of digital ID. I know you're a big advocate on this side and open banking and other stuff among those natures. So maybe I'll let you all open it to you and see how you want to field that question accordingly.
Yeah. Oh, thanks. That's great. I'm definitely a big fan of the of open banking because I think it brings a necessary sort of ability anyway for a more level playing field, and Canada definitely needs that. I'm still digesting the hourglass analogy that Christian gave, which I thought was very cool. I think we need an infographic on that or something. But I'd like to actually maybe focus a little bit on the consumer and retail aspect because I think we're working with a number of incumbents who are adding financial products to their offering because as people are, whether it's in a retail store or online, as they're being much more careful with their money, things like buy now, pay later are not necessarily of interest because they need credit, right? It's more because they want to smooth out some of their payments. And I think that that's one of the really interesting, things that the pandemic kind of, really accentuated. It was already something that was just starting to happen. And it's something that's being offered right as you're making your purchase. Much more so, I think it's something like 90% of that buy now pay later is happening at the online, like e-commerce. But conversely, I do feel that we've got still a lot of challenges in with small businesses getting access to sufficient resources. And it's I think a lot of it has to do with the fact that we're still not in a place where anyone is really willing to look at that small business differently, like to take alternative data sources into consideration. And I think we're all waiting to see what's going to happen to our sort of small business space in Canada. And I think it's true that the government funding has definitely, provided a bridge, but, unless you've recovered, to be able to, kind of shift off of that government funding, I think the last budget said something like September for that, things like the wage subsidy and I think that's going to hit people really hard. So open banking is something that I think would be a huge welcome relief, because it would enable, at least in some ways, for small businesses to find alternative lenders, and that is just a really tough thing to do right now.
Yeah, it's got great perspectives. Maybe from a regulatory environment, I'll shift over to Bruno, because there's some interesting stuff that you've seen on the Brazilian front, and it has a huge impact on fostering the competitive markets space that you've seen. Can you elaborate that and how it's really resulted in the impact it has on the Brazilian ecosystem, or other aspects that you've seen that around the world?
Definitely, Jan. I believe that in Brazil, here in the last previous 10 years, we have evolved a lot in terms of a regulatory framework, and that's bringing a lot of a competitiveness to the market, and many of the new entrants are now able to operate here due to these changes. So we saw things just like the central bank created a framework for digital lenders to operate here in the country. It was something like 3 years ago they did that, and it's doing quite well. And we are seeing an increase in terms of number of players in this field here. And the other thing that's important to consider is that right now in Brazil we are implementing open banking here. So and we are looking a lot to the UK model and the Australian model in order to not try to reinvent the wheel in many aspects in terms of and APIs and standardization and things like that. So we are in a good path for that, in a good pace as well. And it's probably we're going to end this process by the end of this year. And 2020 was a very important year because we had this start of the implementation of open banking. We saw a new infrastructure here in Brazil for instant payments called Pix that also was implemented on November 2020. And then we also had regulatory sandboxes that got implemented. We have 3 different regulatory sandboxes, one for each regulator: insurance regulator, the capital markets regulator, and the central bank. So it's a very, very important moment we're seeing right now. Looking at the Latin America as a whole, I believe that because of that, Brazil is a little bit ahead of the others, especially Mexico, that we believe that would implement first the open banking regulatory process, but they kind of got stuck in the middle because of many things that happened, especially changing management and other things. So Brazil is doing quite well on that, and I believe that we're going to see many more different players acting here. But not only banks and fintechs, but also different entrants such as retailers, telcos, all of them tap into this market and also providing financial services and especially lending as well. So it's a very interesting spot to look at.
Yeah, no, absolutely. There's lots of interesting takeaways and trends to learn from what you guys are seeing on your side and what what could potentially take hold on the Canadian front. Do you want to shift to Amar, as we haven't heard from you yet? So this may be a big question here too. I mean, from your perspective, when we spoke, we talked about how the industry remains strong from origination demand, stability in demand versus fulfillment, increase in online lending. But maybe you could just kind of speak to that. And this is the tough, tricky part being, government funding ending post-September, right? Like, what is your potential perspective on how you might see that? It's a bigger one there, or just overall as the industry as a whole, as you've seen a lot of different played for some pretty key roles to get some good feelers out there.
Yeah, absolutely. So if we take a step back and we look at the Canadian market as a whole, look over the last 5 years, we've seen some strong foundational kind of gravitational changes. As you mentioned, the origination volume of the alt lending space has kind of doubled and tripled year over year as a whole. We've seen some tremendous success stories in the likes of a PayBright, a Clearco, a GoEasy, a Fairstone. We've seen large enterprises like a Shopify provide fair and kind of easy access to seamless capital. So there continues to be kind of that strong demand when it comes to frictional seamless funding. From the perspective of digital fulfillment, this is kind of table stakes, right? So consumers and businesses want to be able to transact on the device that they're choosing, at the location they're choosing, kind of anytime they want. And if you look at the Canadian marketplace, this is kind of where you have a tale of two stories. So you've got the fintechs that continue to kind of provide seamless access to funding through digital channels. And then you have selective banks to their credit that have really begun that innovation process that will enable them over a period of time to provide some level of digital fulfillment. However, that pace of deployment as a whole is still lagging the rest of the world. So when it comes to kind of fulfilling that element of demand, it's still slow for Canadians. It's still hard to get access to financing for Canadians. Canadians still partner with their banks to get financing. So there's an element of kind of a mismatch of product available to the demand available as a whole. Now, if you flip that, and from the perspective of an institutional credit investor, we operate in an environment or an economic environment where bond yields are compressed, margins are compressed, so it's hard to get yield as a whole. So especially finance, to me as a whole, is a really, really strong and kind of attractive asset class. It still provides an element of yield as a whole. And then in the Canadian market as a function, like there's a lot of strong alternative originators that still fill that gap from a yield environment as a whole. And then, Canadian originators are sophisticated in nature where they're leveraging data to be able to provide to their institutional clients. So there is a demand of capital or demand of yield in that capacity.
Awesome. A lot of good stuff there. I just want to be cognizant of time here. We do have a poll, so I'm going to launch that right now for everyone, including panelists, to be able to participate. So that should be coming in to you in a second. I think, have it been received? It should be up at this point. Perfect. For some reason, I can't see it. That's why I'm going blind. Also, to the audience that's out there, do feel free to ask your own questions at this point, so we would be able to get it in there. But I don't see anyone in the Q&A. And if we can ask it live, we will. If not, we'll certainly, someone will also type it in, so our panelists will respond to it. So on that note, we can probably close the poll, so I can already see some of the results. And this could help feed, and we'll share those results, and it could feed the panelists in their next area on a particular area if they feel like speaking about. I do have questions. Some of the stuff we talked about, alternative data sets, was brought up. And so how far along are we really advanced? It seems we might be a little bit more delayed on the Canadian front, probably also brought up with the delays around open banking and the impacts around that. Maybe getting some perspectives from the different people around the on the poll, or if we can share the results. I can't see it for some reason. So it's probably hidden in one of my many windows. So if you're able to see the results, feel free to comment on those, on what you see there as a key, as anything that seems to be a key trend there.
So we have loss delinquency rate increases at 22%, taking over the poll. And in second place, we actually have 2 at 17%. So new entrants, alternative lenders, challengers, etc., as well as ESG.
So it'd be cool to have from the panelists if you either want on the alternative data and open banking comment, or do we agree with this poll, or where did you vote in this perspective and why?
Sorry, go ahead, Sue.
Well, okay. I was going to defer to you because you're the real lender in the group of us, but and so maybe you can respond to this. I'm surprised to see sort of loss delinquency rate increases because and maybe I've got not a broad enough view, but in again, like, and I think it's really important what Bruno was saying about, looking at retailers and telcos and others. There's fast and furious coming into the financial services space. And again, just kind of, you look at Loblaw's financial results at the end of last year, their financial services business, the profit shrunk. Don't quote me on this because it's public, so you can go find it. But let's say it went from something like 150 million to 50 million. And the reason for that is because of the fact that there was, people were paying off their balances. And so there was less interest earned, and people were spending less. So like, it's a weird trend, I think, because we're all expecting, somewhat of the, reverse, as you said, like people defaulting on their credit cards. But in fact, I don't see that happening. So, and maybe that's just one aspect of the lending, and they are in fact doing that on mortgages or consumer loans. So Christian, maybe now you can kind of.
Yeah. Thanks, Sue. No, and you know what? I don't have much to add to what you said because I wholeheartedly agree. I mean, I was surprised to see loss and delinquency rate increase. Generally speaking, as we mentioned earlier on, like government programs have helped people stay afloat and not fall into the delinquency cycle. And it can be kind of a downward spiraling cycle, which is not a good thing, obviously. And no one wants people to go into delinquency. So every financial institution tries to help their customers as much as possible to not get there. But with the influx of cash that the government gave Canadians, I think that's what propped up the low rates that we have right now. And we do have low rates of these in that category. Very selfishly, I voted for technology just because, like I said, I'm a product guy, and that's kind of what turns me on in this space. But yeah, everything you said, Sue, is right on par. I'd like to know what Bruno, how Bruno did.
Well, I voted for embedded finance because I believe that this trend is really advancing. Here in Brazil, we have two examples that are very interesting to mention here. One is iFood, which is a food delivery app, and now they also create their own financial division, and now they are lending to the restaurants. So and they can understand much better about the behavior of the restaurants and delinquency rates and the possibility of have delinquencies because they are into the operation of them, and they need this kind of operator a lot. Rappi is another example, which is another food delivery and super app here from Colombia that operates in Latin America. They are doing quite well. And when we look to North America, we have Walmart and other players that are going to enter this market, and for sure Amazon, all those different folks. So it's going to be a much more diverse landscape, landscape that we're going to have from now on. So that's why I think it's that relevant.
Amar, final maybe 30 seconds closing.
Yeah, totally. I would actually jam like embedded finance and ESG together in one bucket. Like you got ranges of captive consumer audiences for large orgs that can fulfill that gap. I think ethical finance, ethical lending is a big trend in the market as a whole. And like you're going to see a lot of new entrants being able to provide embedded finance, embedded wealth, embedded delivery as a whole, but with conduits of ESG kind of baked in there.
Awesome. Exciting stuff. All right, let's bring on Isaque at this point because we're going to get, so how it's going to work, we're going to go through 3 quick pitches. Isaque's going to go first. Share your screen when you're ready. 3 minutes to pitch, and then we're going to get some comments and questions from our awesome expert panelists. Isaque, if you're ready, share screen and take it away. I'm going to cut you at 3 minutes.
Here we go. Thanks so much, Jen. So I'm here today to share on the context of our panel how we solve the problem on the lending side for the agribusiness sector. Jan brings some numbers on the general credit on US, for example, and Agryo works to solve on the financial services for the agri industry. So the problem on this industry is not different from many others. It's very much related to how to underwrite, understand, and monitor risks on the farmer's assets, which are linked to the capital deployed. Let's say a crop which has a yield impacted by weather, rain, temperature, and management, and so on. So what we do to help financial providers in a sense, to comply with all these challenges and move forward their applications, is to deliver an infrastructure which, once the bank is using that, they can submit a pretendant for a loan, for example. We evaluate, we collect information from the last 21 years, we evaluate everything, and then give back to the bank between 5 and 15 minutes, all the history in the last 21 years plus the next 6 months on any crop field on earth for the major crops. That means they can underwrite, they can monitor, they can detect fraud, and they can run other services like trade finance and environmental services as well. So with that, let's say just 2 examples. One in the lending side, let's say a farmer asking a loan officer or the farmer itself can apply. Our system collects that, process everything, give the ability to the bank underwrite and control everything. At the same time, after they process the loan, post-funding, they can keep tracking everything. Every day, the data infrastructure updates itself and deliver new reports in fraud and other aspects of the loan. This cover all the environmental aspects, agronomic aspects, and financial aspects of the transaction. That means they can take care of their books all over the place. Same thing for trade finance. We validate everything. We can guarantee there are no deforestation, no bad behavior in terms of management of environment. And the banks who finance the trade finance can supply the market with food and other products to help to supply our ecosystem, our society with better solutions. With that said, thank you for the opportunities. And if anyone interested in keep further this discussion, please contact us and we'll stay here for some other comments and talks.
Thank you, Isaque. I'll get you to stop sharing. Perfect timing. Leave panelists. Anyone can take it away.
No
Well, I know Agryo, so I think it's, first of all, Isaque, congratulations on your presentation. I believe you guys do a very interesting job. And also, I also believe in the trend of many other competitors that are popping up in the Brazilian market, for example, in this field, because, you know, trying to be specific, I really believe that we're going to see many lenders that are and players in the field that are very, very specific. How do you feel about competition in the Brazilian market?
Yeah, in the Brazilian market, most of the new players are coming in the lending itself, building some technology and doing the lending, because there's always this idea about the book value on the companies, on the startups. We're still thinking the best way for ourselves is to be an enterprise provider and be able to run all over the globe. So that's why we build and how we build the company to do that. So, but there are some players trying to build on that. And it is just a starting point. So just to make up idea for people who's listening, the gap on the agri-finance today is around $2 trillion a year. It's around 500 million families, and we need to do a 10x improvement on the access of finance. There are a lot of effort and space to be built on this infrastructure, and it's not only South America, it's Asia and Africa, North America, and even we have now our presence in Canada, in the US, and all this space movement, demanding solutions for finance in general, not only lending, but other services.
Fantastic.
Great presentation. I think supply chain financing, or, you know, like similar to what you've built is a big trend. In some ways, it's kind of like, you know, what we're seeing on the consumer side with buy now, pay later and point of sale financing, in that, you know, people are looking for ways to finance purchases or, and so I wonder, you know, whether or not you've considered, you know, creating an ecosystem of farmers, of customers, and bringing those to the lenders. Because I think your technology, it sounds really like very needed. But one of the big problems that I think lenders need help solving is getting to that customer. And so I just thought,
process, to say.
Yeah. Yeah, and well, the process, but also actually like the sales channel. I mean, in Canada, we have so many businesses. I know you're specific to agriculture, but somebody who figures out how to build that ecosystem around, the market segment has a very, I think an edge over others from a competitive standpoint.
For sure, this is, let's say, next steps down the road as potential other revenue sources and expansion opportunities for Agryo. But we still thinking that agriculture has a particular relationship between farmers and their trusted parties. It's much harder to sell for a farmer if you don't know them. Then if they know a local bank, a cooperative, or somebody who can do a 5x improvement in their process and process more people on their daily basis, is the best way to do. If you want to go massive to solve this problem, we need things which we can double the books some places, triple the books in some places, because the farmers don't trust too much other outsiders, let's say, from their relationships. It's a bit different ecosystem in terms of, it's not easy to get this, let's say, a fully digital search, onboard, and acquisition of the farm itself. So, yeah.
Last
Isaque.
question. Yeah, go ahead.
Isaque, great presentation. And just curious, like on your platform, are you doing the actual credit adjudication on your own, or is it the bank doing that? If you are doing it, like, how did you get the banks comfortable with your credit policy in your process?
Yeah, we do everything on before, during, and after the lending itself, but we don't do the adjudication, the contract itself. So imagine like a Moody's type of thing for the real world assets, looking every day all over the books of the company, but not doing the transaction itself, because it's a kind of different, demands another type of regulations and everything else. So that means it's much harder to go a global play if we go for every single step from day one. But for this, what we are providing, we can run, and because it's kind of pseudo-anonymous, so banks don't need to share PCI information. There are some tricks behind of our technology which can help us to speed up, like we are now in South Africa, for example. So from day one, ready to go.
Awesome. Thanks so much, Isaque. It was fantastic, getting some good perspectives there. Great questions. So we'll see you later. We'll have you drop off for now. As the next one's coming on, just a quick question from the audience. We saw from Yatir Zaluski, actually one of our portfolio companies. Anyone wants to take a stab at it? The idea of the players in Southeast Asia started in the real economy and then moved to become significant players in fintech like Grab and Gojek. Likelihood for that to happen in North America or even Latin America. Does anyone want to, we only get one answer here. Does anyone want to take a stab at this particular question as we invite up Audrey in the interim?
Well, I already talked about Latin America, so I believe that we have the case of Rappi here, which is basically a competitor. They're similar to Grab, so I think there's a huge opportunity and possibility of them really become big in fintech and related financial services. So, but I cannot say that for DoorDash specifically because I'm not in the ground.
Mm-hmm.
All right. Well, good. Well, we'll leave it at that cliffhanger then, whether or not it'll come on the North American front for now. But Audrey, why don't we, if you're ready, share screen if you want to, or feel free to pitch. You got 3 minutes. We'll let you take it away.
Thank you very much for having me. I'm Audrey. I'm the VP of Operations for Ownest. As you know,
we can also see your presenter notes. It might be bad. Oh. Yeah, all good. Just a false start. It's all good. Just you want your deck to pop. I know you guys spend a good time on those decks.
There we go. Is that better?
I don't see anything. I don't know if it's just on my side, so we have to try one more time.
Oh, I'm having trouble with technology problems. My apologies, everybody. Try again.
You might be sharing the entire there you go. Perfect.
Just didn't like me today. Good morning. So as you know, Amazon has changed the way we shop. Google has changed the way we get our answers. And at Ownest, we're trying to change the way we obtain financing. Been in the home building business for many years. We found businesses like home builders, realtors, and mortgage brokers waste a ton of time doing time-consuming manual tasks. The entire credit approval process alone is still stuck in analog when we know the rest of the world is moving towards digital. That's why at Ownest, we developed a software platform that not only automates financing, it instantly verifies leads so businesses can actually purchase and know who is purchasing right up front and allows them to close those deals faster. So here's a little bit of background. In 2019, when we launched our online mortgage software platform, which to generate leads to our brokerage, just think of it like the Expedia of mortgages, giving borrowers access to multiple mortgage products and lenders. And with some proven traction, we needed to enhance our platform and monetize a new add-on feature that is currently changing the home buying industry. In today's world, more and more purchases are done online, but when it comes to buying big ticket items where credit is a gateway, how do businesses actually know who qualifies for financing or how much that borrower actually can afford? So businesses like home builders have wasted a ton of time selling to the wrong customer. In the mortgage industry alone, up to 60% may not even qualify for the financing, and credit verification can sometimes take up to 2 weeks. Our software solves this problem. So last year, we launched our lead verifying tool. It instantly pre-qualifies and verifies clients with 6 simple questions. So now the borrower and the business know exactly where they stand right up front. And for the businesses, it enables them to cross-sell and upsell, but that's just the beginning. The front-end integration seamlessly powers online sales with a click of a button, even for large purchases like real estate. Then it intelligently screens the inbound leads based on the 5 C's of credit. So let's say you get 1,000 inbound leads, we can tell you the 100 customers who are actually qualified to purchase. Plus, it gives the sales teams and our partners the ability to truly know their customer, close more deals, and get more in-depth business sites. The most exciting part about our platform is it is now transferable to any industry where credit is a gateway. We power financing faster for any online sale in any industry, and we are becoming the future of financing. Thank you for your time.
Thanks, Audrey. Kick-ass presentation. Just curious, like your acquisition model. Are you guys going direct to consumer? Do you intake leads? Do you score them, and then do you pass them to your bank partners? How does that work?
Okay, so for instance, we'll use the home builders. They currently have us on their websites where clients come in, click the button. They ask the 6 questions. We populate to the customer, letting them know exactly how much they qualify for. But to the actual partner, we give them the 5 C's of credit through a stoplight system, because we, due to our regulatory bodies, are not able to give them their credit scores and everything. So we've built criteria around it. We also are taking it to our lending partners that we're working with, and we're just actually launching with a Canadian lender right now to start with a pre-qualifying, because they've found that it's hard to put a square peg in a round hole. So that we are helping them facilitate to get their business that they exactly want. And it's all through online integration seamlessly into their things. We're a widget base, so a plug and pay.
Audrey,
Yes.
yeah,
Hi.
in good
Hi,
presentation.
Christian.
And full disclosure, we work a little bit with you guys. So,
Yes.
but in your path and in your journey to gain different entrants to the market and everything like that, I'm assuming you guys are also working or also planning to work with the likes of mortgage brokers and get out a little bit, still focus on the home sale, but get out a little bit of the builder vertical per se, right? Just so you mentioned about real estate broker, but there's the mortgage brokers as well that already shop for different mortgages. So this could be an interesting tool. I don't know if you have any comments on that? Or?
Yes, actually, we are opening it up to mortgage brokers, individuals, as well as mortgage brokers themselves, along with the home builders and the realtors as well. We've got realtors utilizing it too, where they're knowing exactly where their customers up front. And it's with the mortgage brokers, to go back to your question, we are opening it up for the lenders that are connected with us as well and making it all into one platform. So we're making an ecosystem for every player in the financing lending industry. Thanks, Kristen.
Hi, Audrey.
Hi.
Great presentation. I mean, as an industry, I think it's you picked a good segment of the market to focus on with all of the reno and construction happening in Canada. Could solve the supply chain problem. That would be good, probably for all of us. I wondered what your business model is. Like, how do you make money with the way you're currently going to market?
Right, sure. We have 3 revenue streams. So we have the SaaS model, and then you have a data fee. And then if it goes to the end-to-end financing of our platform, then there's the lender commission that comes through from the brokerage side. So we have the 3 components for finance.
Based on Kristen's suggestion, I'll just make one other comment. So I worked at Finaster for several years, and they, some folks may, or you may recall or know of them by Filogic. So they run that platform, and it's where a lot of the, it used to be anyway, like 90% of the mortgage brokers would use that platform to, communicate with the lenders. And in that context, the lenders are the ones that are paying the fees. So just something to keep in mind. And apologies if there's any mortgage brokers on the phone, but they're just, historically very cheap.
Yeah. Yeah. And we actually integrate with Filogic. So we have a push and a pull directly into our system as well.
Excellent.
Yes, that's where the opportunity for the brokers works. So yeah, thank you.
Awesome. Thanks so much, Audrey. We'll have to pause it there. Just before Adam comes on to the next one, I'll throw out one more audience question. It's so Rhonda is one of our advisors. She was also on the digital ID panel that we had earlier. So, very interested, very passionate about this subject and asking about, are governments ready for this? What about verifiers who can be trusted? Is blockchain the only solution here? Does anyone have any insights, whether on the Canadian or Brazilian front, who would like to maybe take a look at that and how you see it from a lending perspective, if possible?
Yeah, I don't have much insight. I just want it. I mean, if that's anything. I mean, are governments ready for it? I mean, they're as ready as they'll ever be on the different things. Like, you could ask the same question for open banking, or in terms of Canada, obviously, is the Canadian government ready for it? I think they are, but I think with everything that's Canadian, there's a very, very fairly long cycle to go through. But I think, I mean, if anyone has some great ideas on how to speed that up, I think you can really do something really good there. Because I mean, it would help so much to have this common digital ID and just be able to have your ID with you. And I'll use what Sue said. Don't quote me on this one, but I believe like in the Baltic states, like Estonia and I think Latvia, maybe they have this concept already of a digital ID and a digital passport, and everything's pretty digital. And it seems to be working fairly well. So it's not like new and out there and sci-fi or anything like that. It's being done in some jurisdictions. So it's just a question of us getting our head wrapped around it.
Yeah, we'll jump down. There's probably about 100 plus countries on it at this point. So just waiting for Canada to add to that list. I'm ballparking, estimating upwards. But let's get to Adam, Asset Direct, previously focused as LoanConnect, but has become bigger than that. I'll let you take this away. And yeah, go ahead, 3 minutes.
Great. Can you guys see everything?
You're good.
Awesome. Okay, so just quickly, Christian, digital ID is something, I mean, we're now launching in India, and it's something that's available there, and it's so incredible. And I think about the journey we've taken, I mean, with lenders like yourselves or other lenders in country, to try to get something like this to happen here, and how far away it still feels, right? It's too bad. But anyway, so we're creating a world-leading personal loan marketplace. And, I think since the last time I spoke to Sue and Amar, things have switched a little bit for us. So really, 80% of the world's population has difficulty accessing credit or financial products. So that's a huge percentage of folks. That's about 6 billion people around the world that can't get access to traditional credit through a bank. On the other side, we have a bunch of nascent lenders that are using very creative adjudication techniques to be able to try to lend to some of these folks. Some of them may look at social profiles, others may do stuff on the phone, scripted it that way. Even ones that have gone through the Holt Accelerator, one of them is helping lenders lend by allowing the consumer to play a game. So there's a bunch of lenders on one side that are doing really creative and interesting things. And on the other side, we've got a bunch of consumers that can't access loans. The challenge on the lender side is that it's very expensive to acquire traffic. The big guys all spend all the money competing, and it costs a lot of money to get traffic through your door, through Google. Many of the lenders we work with paying upwards of $6 per click to get, and then they have to get them through a funnel and convert them on the other side. So essentially, we've created a platform that connects billions of borrowers with lenders that are willing to fund them at competitive rates. And how we do that is by powering multi-lender solutions for partners that are looking to provide that type of service to their customer. So who are those people? Well, in Canada, it's powering a solution for Credit Karma or lowest rates. We power direct buy. There's some stuff we're doing on international remittance side, but really there's kind of a grouping of different partners that we work with to drive traffic. So one being rate shopping sites, another one being budgeting apps, another one payment and payroll processors, and the new ones that we're launching in the near future in India are multi-lender POS solutions as well as bank decline solutions. And so essentially what we do is we power this multi-lender ecosystem for these partners. They drive their users to the infrastructure. We get very, very good at converting to the network of lenders. And then those lenders pay us a commission when they fund a loan. And the value to the lender is that they're only paying when they fund a new product, right? So it's more predictable for them to scale. And I'm starting to take the position of, if I send the lender the wrong candidate, that's my fault. So I need to be better and better and better at sending the correct candidates to the lender. So it becomes cheaper and cheaper for them to acquire. They can scale and build their business in a very predictable manner. And on the other side, we've got all these guys that, maybe there's some issues with a one lender-led system because it only satisfies a very finite section of consumers, especially in developing countries where many different type of lenders are focusing on different niche areas. Here in Canada, we have about 350,000 active users in our database. We did about 400,000 loan applications last year. We've got a lot of partners. We're growing. It's been great year over year. But again, it's Canada, and the market is only so big. And another big challenge here, on the bank decline side or on some of the prime side, when we're trying to look at point of sale, getting the banks to play ball in Canada is a very, very long and tumultuous journey. Whereas in India, there are some very unique circumstances. Quickly in India, about 600 million people got a bank account in the last 6 years. 90% of those folks are unable to access credit from a bank. So we've created a solution that allows those banks to essentially market personal loans to their customers. And if they are ineligible, refer them through our platform and get a loan through an alternate provider. But there's kind of some beautiful, simplicity around this. So essentially, they market everybody. 90% they say no to. The ones that want a loan can go through our network and hook up with one of 40 different lenders. If the consumer makes payment on that loan for 18 months on time, the bank will buy back that loan at a lower rate. So essentially, the bank says, no, I can't do anything for you. And they've got this massive, massive group of consumers, right? I'll help you. You're going to go outside of our grouping anyway and try to find that loan. So I will help you with a catered group of lenders. If you perform well on that loan, I'll buy it back and I'll show you a lower rate. So that's one of the big solutions that we're launching. Another one. Oh, look at me, I've gone too far.
Sorry, I just want to be cognizant of time, Adam. Maybe we could pause there at that point. So big opportunities, but also there is more to come. Quickly to our panelist, quick comment or question, and we'll try and keep this one a little bit more speedy on this one.
Hi, Adam. First of all, I know you. I love your product, and I already told you that in other occasions. But I was wondering how your product is performing in India. You also mentioned that you guys are in India. I know that you guys work with a local network of POS. So I would like to know a little bit more about that.
Yeah, so really the beautiful part about our business is we partner with companies that drive traffic. So we don't have to pay money directly to acquire users. In India, we're partnering with a platform, a company called AGS, and we're integrating our multi-lender solution into 120,000 payment terminals across the country. So day one, we launched at about 1,000, and then we pushed towards 120K through the summer. In that situation, any terminal can now provide personal loans to their customers for consumer finance, or they can also sell personal loans as a product. So essentially, you'd press a button on the terminal, you'd enter your phone number into the terminal, you get a text to your phone, you go through the application, you get funding. That would all happen through the merchant acquirer. I mean, the other side, when you're not selling a product, corner stores can also sell personal loans to their terminals themselves. So really, distribution is through large partnerships that allow us to scale in that way, or partnering with banks that have a huge chunk of consumers who'd be interested in this type of a product. Really bringing this to the tap.
Yeah, final question and then 30-second answer from the panelists.
Adam, good to see you again, man. Just curious on the banking side, like have you plugged into the various Indian banks? That'd be one question. And then the second question is from a regulatory environment, like India is a very different operating region. How did you go about kind of getting regulatory adoption?
Yeah. So working with a number of the banks currently, some of the bigger guys were pretty far down the pipe. We've been working on it for about a year with these guys. Not too big of an issue, I guess, as far as regulatory on the POS side, but there are some data concerns in India, right? All of our data needs to be stored there. We can't take or export certain amounts of data. There is a tricky kind of area on the bank decline side, but because we stay out of the lending and we act as a platform, we're allowed to be a conduit that is really not regulated, whereas the lenders themselves would require the regulation to support that.
Awesome. Thanks so much, Adam. That was fantastic. Really appreciate that one there. So we're going to, I guess, well, you could close up your camera there, and then we're going to launch the final poll for, because I just want to wrap up in time here. The final poll is who was the best pitch? There was 3 pitches today, so you guys should all be able to answer, including the panelists. So let's get the People's Choice Award here. So I'll get Sama to launch that. In the interim, 2 quick questions for our panelists. What company or just one word, what company or organization should we be paying attention to right now? So we'll go around. Who would like to start?
I could start. You guys should be paying attention to me. I'm coming down the road very soon, so watch out, Canada.
Great.
No,
Who's
Amar
next?
is my answer. Wait, Amar.
2 for Amar. Anyone else? Bruno, Sue.
Well, looking at at the region here, I think it's PicPay. PicPay is one of the largest super app in Brazil, and they got 50 million clients, and they are going to make their IPO on NASDAQ this semester. So I believe this guy are big.
Awesome. And Sue, final words. What should we be looking at?
Oh boy, I think that we're going to see one, if not, maybe 2 or 3 big challenger banks launch soon this year in Canada, new ones. So I would be watching that space. And if I had a nickel for everybody that's trying to launch a prepaid card wallet like product, I would have maybe a few bucks. So.
Awesome. Well, that's very exciting. Great to hear that is the case. What's going on here? Let's check out the numbers and the votes. Benares Asset Direct, 47% takes the win. Next by Ownest. Lastly, Agryo. So kudos. There was a bunch of people who were torn still as well, but shout out, we're all winners today because we advanced thought leadership and we had a fantastic discussion. So thank you to our panelists. Thank you to our stars for coming, and thank you for our audience for listening in and attending. Have a great rest of your week.
Thanks, guys. Good seeing everybody.